I'm going to go right in. I want this to be impactful, 15 minutes, give you all the content. And please, I encourage you to turn your cameras on, use the comment and the chat feature. You can put all your questions as they arise in the comments. Soon as the 15 minutes is over, I'm going to go and start answering those questions. I'm also going to provide my cell phone in the comments. Please, if you are more comfortable having a conversation after, you can call me or text me. We're going to go ahead and do that right now. Put my cell phone in. I'll even read it out loud here, 215-290-1915. Okay, I'm going to jump right in. So 3 proven strategies to buy a home in 2024. I'm going to start with number 1, how you can buy a primary residence with zero, and I mean nothing out of your pocket. You go to closing with a nothing. In some cases, you actually go to closing and get some money back. I'll explain that later. So I'm going to use this example. Say you buy a home for $500,000. There are 2 things generally you need out of your pocket at closing. You need the down payment, unless you're lucky, unless you're a veteran, and then it can be waived, and closing costs. So using this example, generally it's 3 to 3.5% down. So we're going to use $17,500 as an estimate. And closing costs, look, every state, every county is different. Let's just use $20,000 for now. That's a pretty good average. So how are you going to buy a $500,000 home and come to closing not with $37,500, but with zero? All right, so let's start with the down payment. How do you get rid of this? There's 2 ways. I'll talk about option 1 briefly. I don't love option 1, but it is a path to zero. So I'll explain it. Down payment assistance program. Most realtors have heard of this. Maybe most of you on the call are familiar with it. Down payment assistance means, some institution is picking up some or all of the $17,500. So the concept is great. They'll pick up this cost. And in some counties, even here in Pennsylvania, we have some good ones. So it's not the worst thing, but there are some downsides. 1, not everyone qualifies. 2, here's the big ones, 2 and 3. 2, this can take time. 30 days, 40. I had one go over 90. You think a seller wants to wait 90 days to sell their home because you're trying to get this? They're not going to wait for that. So you're not as attractive as a buyer. Here's the big one most people don't even realize with this. Even with the popular ones you're doing right now, when you do this, almost always, there's a lien against your home. And often this is forgiven after 5 or 10 years, but we all know what environment we're in. Interest rates are coming down. That's a virtual guarantee. Do you want something possibly preventing you from doing a refinance? Because absolutely, this lien on your home could stop you from refinancing. Now, likely it won't, but guaranteed it'll at least delay the process and cost you extra fees. So the worst of all, if it doesn't even let you do it, you might have saved $17,000, but can you imagine you don't refinance and you don't get an extra half a point lower? That's not 70. Then you're missing out on 50,000, 100,000. So that's, I don't love this. What I love, and this is maybe this is the big reveal. The bank pays the $17,500. That's way number 2. You have the lender pay this. Okay, how can that happen? I've been doing this 20 years. I've worked with some of the biggest institutions, Chase Bank, Wells Fargo. I'm now a broker. I work with 137, I think we're up to 144 lenders where I work, West Capital Lending. Only one, and I'm like, only one am I aware of that can do this. Just one. So it's not readily available. We're lucky enough to be linked up with a lender that has an exclusive contract with West Capital Lending and allows this to happen. As long as you can qualify for an FHA loan and you've got a 580 credit score, then very likely, they're the 2 big ones. There's a few other minor things we can talk about, but as long as you've got that FHA 580, this very likely gone. Here's the best part. It's not a lien on your home. Not like the down payment assistance. It's essentially a gift. It's gone. You sign at the closing, it's gone. Truly. It will not prevent you from refinancing. The most challenging part when I'm talking to customers about this is convincing them that it's not too good to be true. And it's not, you get this in writing as your proof. All right, so that's how we get rid of the 3.5%. The 20,000. So there's really just one way, again, unless you have the money or a gift, to get rid of the closing cost. Now, it's a seller assist, but this is not the typical. There's a strategy to this. I've purchased homes using a seller assist. I've helped people purchase homes. There is a strategy. First, to explain, seller assist is essentially this: the seller is paying your $20,000. So what happens if you offer 500,000 and they offer 20,000 to pay your closing costs? That means the seller gets 500,000 minus 20,000. You're left. The seller is left with 480,000. Can you see why that's not as attractive for the seller? They approve this, they instantly get less money from selling your home. So what is the strategy here? And look, full disclosure, because I talk to realtors all the time, and some don't even want to deal with this, especially not now. If it's a very competitive home, just got listed, you might not be able to pull this off. But again, there's a strategy. And I will say this, and I know there's at least one, if not two, realtors on this call that we've done this. You want to work with the right realtor. Bring this up. If you want this program and the realtor is not really open to it or has questions, have them call me, or I'll refer you to another realtor that has no problem doing this. The strategy is this: with your great realtor, it's a negotiation. What you're really trying to get to is, all right, seller, what is that number you want? What is that bottom line number? If it's 500,000, if you know the seller needs to get to 500,000, what's the strategy here? In my experience, what I've done, okay, you offer 520. Now hear me out. You offer 520. The seller pays 20,000 in closing costs, so he gets 500. He's happy. He gets his target number. You get your 20,000. Now, some people instantly stop me here in realtors and say, okay, that sounds great, but I just paid $20,000 more for a house. I only wanted to pay 500. I don't really want to pay 520. Okay, well, if you don't have the 20,000, what is your other alternatives? But here's why I don't think it's a big deal. And maybe I'll convince you. You're buying the home for 520 instead of 500. The downside is your payment is about $90 to $120 a month more. So you get $20,000 in your pocket. And what did you lose? $100. And we all know rates are coming down. Give me 4, 6, 9 months, you'll see a payment drop well below that. That's the strategy. That's how you get 3.5% waived, 20,000 waived. You come to closing with nothing, zero. All right, that took about, we're running quick on time, but I'm going to get this done. So topic 2. And by the way, go ahead and start asking those questions. We're going to answer them in about 5 minutes here. All right, so I had a whole topic here on how to buy an investment home with zero income. And when I prepared this, some amazing things were happening in my life in regards to this. So I'm going to tell you what my plan is, and then I'll tell you why. But in 2 weeks, I'm doing the same thing, all about this. Not just how to buy investment homes with zero income, but what I've done. About 45 days ago, I purchased a rental home. Today at 4 p.m., and my technology, I hope, is still working. Okay, I think we're back. So today at 4 p.m., I'm closing on a second rental home. I have 2 more under contract, 4 rental homes closed in 45 to 60 days. That's correct. I'm going to go from 4 to 10 quick. 10 to 50 is the goal, and then 50 and beyond to 100. I'm going to look to do that within 1 to 2 years. You can too. I'm going to show you exactly what I'm doing. You go online and listen to people, they'll tell you all these strategies. I will show you what I'm doing. I'll show you my contracts. I mean, this is for real. I'm doing it. And these houses are coming quick. A couple of weeks ago when I started this, I was going to touch on it. Too much is going on, a whole topic in 2 weeks. We're going to put the link in the comments. You can sign up for that now, later, anytime. And also feel free to text me if you have questions on that. Okay, let's jump in right to number 3, because we got a couple minutes left. How are you going to get well below interest rates? Well below market. 2 ways to do it. Way number 1, I don't love, but I'll explain it. 2-1 buy down, 1-0 buy down. Basically what this means, you're going to put an offer in on a house and you're going to ask the seller to pay fees so you get a lower interest rate. The concept sounds great. You can even get down as low as, so let me explain it this way. The average rate today, bankrate.com, I checked this morning, 6.5%. We're brokers. And at least with us, our average, just using a 500,000 purchase price, conventional loan, 20% down, just kind of an average loan, 5.875. So already going with the broker, you're in the fives. You do this 2-1 buy down, you can get down into the 3.875 for a year, 4.875 the year after that, then back to 5.875. Again, the concept sounds great. You get this lower interest rate for a couple of years, but you're negotiating that with the seller. I don't love that. If you're doing this with the seller, that means you're losing something else. There's a better way. Now, don't get me wrong. A home's been sitting on the market for 100 days and the seller's desperate. Get everything you can. Get the seller assist, get the 2-1 buy down. But generally, and especially in this market, the better alternative, we offer it here exclusive. Well, I shouldn't say exclusively. I'm sure other lenders, there's 4,000 of us, maybe have something like this. But what we offer is a 1-0 buy down, zero cost to you, zero cost to the realtor, zero cost to the seller. So essentially, you're already getting among the best rates you'll find because we're brokers and we have lower interest rates. And then on top of that, here it is, you get a full point less for the next 1 year. So you're going to average in the fours, 4.875 on average. What is great, and what we talked about earlier, we all know rates are coming down. My opinion and is December to March. I think that's kind of the area where you're going to see the big drops. Maybe a little sooner, maybe a little later. No prepayment penalty. If you close on this, 2 weeks later they come down, let's get you the lower rate. But you should never see 5 or 6 again. You're going to start in the fours, and we're going to get you into the fours. Maybe we get lucky and rates get down into the threes. I don't know if we'll get that lucky, but you should never see a higher rate. And you'll get out of that loan within that first year. Okay, let's jump over to the questions. I hope you found that impactful. Feel free to text me. Sign up for our next webinar in about 2 weeks. I'm going to go over to some questions here. Okay, so let's see. And Sigourney, I have my assistant here. Do you have any questions for me?
Yeah, Brian was wondering, what about appraisals that don't meet 520K?
So that's a great point. And so that, if you want to say, is there a downside to this or a potential where this doesn't work? So here's where, this is where the hope is that you have a really strong realtor. And for the few that I've just recently done, we've got it to go through this way. Because here's the thing. When you put in your offer, you really are hoping that your realtor is negotiating that if the home doesn't appraise high enough, that you're not covering that expense. There's a way to put this in the contract where everyone agrees, and then you do the appraisal. Now, let me just say this, and then I'll get to specifically answering the question. It is rare. Now, maybe other realtors will disagree with this, but in all my years of experience, especially now when home values, rates coming down, we think the values are going to continue to go up. It's rare that whatever someone is willing to pay for a house doesn't match what an appraiser is going to appraise it for. So chances are good it's going to appraise what you need it to appraise for. It's right on the contract. That's my experience. That's what I've seen. That's what happens. That's what's happened the last number. I can't even remember the last time that didn't happen. Now, if you submit this the correct way, I usually see this as a positive if the home doesn't appraise higher. Anytime I buy a house, I'm actually hoping the home appraises lower, because then I can go back to the buyer and say, or to the seller and say, look, the home didn't appraise. I don't want to pay this much. And then you're forced to put the seller in a position where, you know, is he really going to walk away, start over? You put a house back on the market, doesn't look as good. So look, it's not a perfect strategy. This isn't going to work every time, but if you do it the right way, overwhelming majority of the time, that's not going to be an issue and can actually work to your advantage. Okay, are these options available on your first or primary residence? So this specifically the zero out of your pocket, what I discussed today is specifically for your primary residence. However, what we're going to talk about in 2 weeks with your rental homes, I'm buying a house and it's a couple $100,000. I'm coming to closing with $4,000. That total. It's basically 100% financing, and they're covering most of the closing costs. I walk in with virtually nothing, close to nothing out of my pocket. So this can be done for rental homes. It's a little bit there. This will take a 15-minute webinar to explain, but it's possible. But for your primary residence, that's the target for zero out of your pocket. To get one of these lower interest rates, that's as long as you can qualify for a conventional loan, you get that 1 point less with us. Rental home or primary residence doesn't matter. Okay, is it possible to get a preferred VA rate if you are joint buying an investment property with a sibling who is qualified for a VA, but the other sibling is not qualified for a VA? So if I'm understanding this correctly, you can't buy a home, an investment home, if you're a veteran. That the VA program is only for your primary residence. Again, unless someone knows something that I'm not aware of, in all my years of experience, that's the case. But if you're buying a primary residence and using it with a VA loan, you don't even need these programs. Some of them, that is my favorite product, the VA. There are just so many benefits. And at least with us, that's where you get the best interest rates. I love that program. And then the VA Streamline, as most veterans know, when it's time to refinance, the easiest thing to refinance is a VA loan. Okay, income limits. There's no income limits for any of these programs I'm talking about, but that first one where everything is waived, the 3.5% down, you have to qualify for an FHA loan. So, as long as you qualify, then a couple other minor things I have to say, but as long as you qualify for the FHA loan, the income, not issue. And by the way, I know we didn't talk about, there's so many programs. If your income is a specific way, we actually have another program. And if you have a 1% down, there's a program that's equally, if not even better than the ones that I've spoken about. But you do have to meet certain income criteria. It's only in certain areas. But that's why it's so important to have this conversation. And because we have 137 lenders, and look, whether it's me or another broker, this is why I love brokers. You talk to a broker and they find you the best lender that gets you the best overall deal. Because it might not even be these programs. We have others. Sigourney, do you see anything on Instagram, even any other questions, anything else I'm missing? Because we are nearing kind of the end here, if anyone wants to unmute themselves and jump in and ask a question, again, I'm not great with technology here, so I don't even know if that'll work, but if you'd like to do that, I'd love to hear from you. Brian Boyko, you must have a question.
Yeah. Hey, Tony, this is Lee. I was just wondering, with these programs you're talking about, is there anything that would prevent me from refinancing down the road in 6 months when rates do come down a bit?
No prepayment penalty. That's always the key with us or with any lender. When there's no penalty, there's no restrictions. I will say this, though. This is something no one will probably ever admit to, but I love to share this. When you work with a broker, and even some non-brokers, they will tell you not to refinance for 6 months. Why will they say that? There's no prepayment penalty. Why are they saying that? Because usually their commission's pulled. So a lot of lenders don't want you to refinance within 6 months for that reason. That's me just being honest. If it makes sense to do it, the customer is the most important. You don't want to miss an opportunity. So if you're working with me, first of all, we're lucky enough to be with the fourth largest, but the best brokerage in the country. So a lot of our lenders waive that anyway. So we don't have salespeople tempted, to keep you in something or tell you to wait 6 months. So the answer is no. You can refinance anytime, and you should refinance when it makes the most sense. Who cares about the loan officer's commission?
I have a question.
Yes.
So the 17,500, is that like the maximum amount, or is it say someone's buying a house that's $600,000? is that a percentage, the 17.5 that you came up, a percentage of the 500,000? I mean, how did you, or is that like the top?
Thanks for mentioning this, because there's something else important that I didn't even get a chance to mention. To answer your question, no, there's no limit. This lender will pick up the entire 3.5%, regardless of the purchase price. So all of that is covered. What's actually interesting about this too, say you have a customer, they want to put 20% down. They could put 20% down and still get 3.5% credited back to them. So you don't have to do this with nothing out of your pocket. You can elect to bring money to closing and take I'll word it this way, the free 3.5%. So this is a strategy for people that have very little to bring to closing. And look, if you have 10,000, 20,000, do you really want to get rid of all that just for a down payment? So I think it's best. Like, this is just my opinion, and maybe I'm too forward, but like, if you have absolutely nothing, I don't know if you should be buying a home, right? I mean, like, you have no down payment, no money for closing costs. Are you ready to buy a home? That's a separate conversation. But I think this is best for someone who has, say, 5,000 or 10,000, 20,000, and doesn't want to get rid of all of that, so they can use this program. Now, their payment's going to be a little bit higher because they're not coming to closing with any money. But I'd rather have a little bit higher payment, hold on to all that cash, because two reasons. One, interest rates are coming down. Your payment will be lower within a year, very extremely likely. And two, say you did this program and said, oh man, I got $20,000. I need a lower payment. I should have brought it to closing. No problem. It's called a recast. Take that money, put it towards the loan, call the lender, tell them to recast the loan. They recast the payment based on 30 years. It's just like you made that down payment. So it gives you full flexibility to handle it that way. Okay.
Question, is it, okay, this is definitely an FHA product.
Yes, you can only do this where they'll waive the 3.5% for FHA, correct? Yes. By the way, for the few that I think may still be on, I actually have the VP, the AVP, Lito, is actually in the chat. He's the one who actually controls it. He works for he is the one who controls this program. I've done so many loans with him. So he's just further confirming what I think we already stated. No income limits for this program. But no, this is for real. And we have the best person in the entire company that represents us, and he's available. He is the most popular guy. He's available 24/7. He'll tell you. I've called him at all hours of the day to try to work through with these programs. Yeah. All right, can I have my client reach out to you for a little? Of course, Leslie, would love to help any of your clients anytime. Do you want to put my cell phone on? Yeah. And look, I mean, my number one goal is to try to add value. Number one, even if it means not coming with us, I truly am saying that, and you'll only know that for sure if you start working with me, to see that that's always the goal. We try to do what's best for customers. Of course, we want to work with them and help them do their loans, but it doesn't always make sense for us to do it. We have 137 lenders, and we have just about every single product. But I've got some friends that do things at some of these larger institutions. If you've got a ton of cash and you're buying a $2 million home, we still have some products. And if you're self-employed, but Sarah doesn't make sense to come with us, but I can still kind of direct you where I would go, give you suggestions. Okay.
So what's happening? It's Brian. I had to step away for a minute, so I'm sorry if I repeat anything here. Is this program only available for first-time home buyers?
Great question. No, it's not restricted. Nothing I've spoken about is restricted for first-time home buyers. We do have some programs that may actually end up being better than this one for first-time home buyers, where you bring 1% to closing and you get an even better deal. But no restrictions. Yeah. Thank you, Brian. unless I'm missing any other questions, the last thing I would do is encourage you to join the next one. Maybe my favorite or second favorite topic to talk about, which is how the heck I got 4 homes in like a month or 2, and I'm going to get to 10. By the time we're on the next call, I'll be able to contract on more and scaling that up to 10 and then quickly 50. So very excited to talk about that. Appreciate everyone joining. Unless there's any other questions I'm missing.
Mortgage Anthony is Instagram, right?
Yes, anything on Instagram? We're good? All right, well, thank you. I'll be reaching out to some of you separately here soon. I see a number of texts that came in, so appreciate that. And we'll hopefully see you again. Thank you.